Hello, everyone, and welcome to the fourth episode of my podcast series, Invested. On this show, I sit down with creators, founders, and investors making an impact on this world. Today, I had the pleasure of chatting with somebody that I admire and that I've enjoyed getting to know these last few months, Justis Mendez. Justis is the co-founder and managing partner of OneSixOne Ventures. OneSixOne is a leading pre-seed venture capital firm in the Southeast that invests in enterprise software and government tech startups. OneSixOne is very active in the Gainesville community and supports a lot of initiatives on UF's campus. OneSixOne also has successfully launched an accelerator where they have helped over 40 companies scale growth. These companies have raised millions in funding and have generated even more in revenue. Prior to OneSixOne, Justis worked in fintech and started his own entrepreneurial journey as the founder of Q, a peer-to-peer parking app in Gainesville, Florida. From being kidnapped by criminals at 14 to raising millions of dollars in funding for his venture fund, Justis has quite the story to tell. And here it is. All right, Justis, thank you so much for coming on the podcast. I know we've been both looking forward to this for a few weeks now, and so grateful that we're able to make the time, especially for you and your busy schedule. Jumping straight into it, who is Justis Mendez? There's a lot to you. There's a lot to your background. For those in the audience who might not know your story, this would just be a really great opportunity to kind of hear a basic 5-minute of your life so far.
Yeah, thank you for having me. And yeah, for sure, it's been crazy bouncing around. So glad I had the time today. But yeah, I like to think of myself as multi-dimensional. So I'm a VC, I'm a friend, I like to have fun, like to enjoy myself, Gator, just like you as well. But yeah, so started a venture capital fund, so far investing in about 12 companies, continuously raising and investing, which is, super fun, getting to travel across the country, meeting great people like yourself.
Right.
And yeah, grew up in Cleveland, Ohio, which was super unlikely that I'm here right now, but I guess we'll get into that story a little bit more unless you want me to now.
No, I think it's really important to know kind of your background, and because just knowing you now and listening to other podcasts that you've been on, that experience growing up in Cleveland really did shape you into who you are. So would love to kind of just hear about kind of those trials and tribulations and kind of what led you to UF and eventually starting OneSixOne.
Yeah, absolutely. So crazy. Grew up in the Stockyard neighborhood. It was called 52nd and Denison was my street. Stockyard neighborhood, super rough, blue collar. Cleveland, Ohio was all, and this is the same with all the Rust Belt, that all these cities really position themselves around manufacturing and factories. And then as, these jobs left the United States, they become just these crippled economies where there's no jobs, everybody's hopeless. And they used to be literally like the pearl of the world, right? This is where Rockefeller was, Andrew Carnegie was. It's pretty insane. It's like New York. The streets are lined with marble. Every single building is just absolutely beautiful. Like you could not rebuild a city to even look like this. But, as these jobs started to leave, places like a Cleveland, Ohio versus maybe a Pittsburgh, they call this like a slow boil. And it's the whole entire story about the frog in the pot, right? It starts as warm water. And as the water keeps getting warmer, the frog can no longer jump out because the muscles just kind of contract. So it's the same way in a place like Cleveland, Ohio, didn't switch fast enough to tech. Luckily, Pittsburgh had Carnegie Mellon, so they switched to robotics as fast as they could once all the steel jobs started leaving. But so, in my neighborhood, 71% of adults above the age of 18 are illiterate below fourth grade level, right? And this really shaped a lot of my life. Just coming and seeing these people, I just felt out of place. And it felt like I was just destined for so much more. So, growing up, I grew up with a single mother. So my grandparents had to raise me the majority of my life. Wouldn't have changed it for the world. They're amazing people. Yeah. But yeah, never met my biological father, never saw a picture, never heard his voice, which was, super rough for me growing up at first. But then I started to realize it was a blessing in disguise because I got to mold who I wanted to be. Most people see a parental figure and they try and become more like that person. But me not having that in my life, I got to pretty much mold who I wanted to be. And that's actually one of the biggest lessons I learned from somebody. They said, life isn't about finding yourself. Life is about creating yourself and becoming that person. So
I like that.
So yeah, it's pretty crazy. Around 2008, I think a really big thing for me as far as like really wanting to understand finance, because most little kids don't try and understand finance unless maybe your parents are in finance or bankers, was 2008. So my mom worked at General Motors. The stock price hit zero. She lost her 401k overnight, along with everybody else who worked at GM. We almost lost our home, almost became homeless, eating ramen noodles. My mom would put curry in them, and I thought that was like a delicacy dish, But now looking back on it, I realize how poor we were. But yeah, maybe really think, like, what is the stock market and what is finance? How come everybody lost money overnight? And how does finance even work? And who runs these companies and who owns them? So that kind of worked my interest to try and figure out about finance. And I could get into more of that later on how we ended up launching a fund and actually getting into finance. But fast forward, little kid, in this really rough neighborhood, the people you usually look up to are, the people making money in your neighborhood. And unfortunately, these are usually, the drug dealers and the gang members. So, I had some of these people take me under their wing. And, I thought the world of them at that time. You always want to be around the boss, and you always want to be around guys with nice cars. And thank God they actually saw something bigger in me, and they pushed me away from it. They were like, hey, like, you're the only one smart enough to get out of this. Like, I don't want you to continue to be in this life. So by the time I turned 14, I got kidnapped by some gang members. It was crazy. And I just kept going through these trials and tribulations throughout my life. But no matter what, I just kind of kept myself grounded, and my grandparents instilled like a strong faith of God in me too. So I always just kept going back to that. And that's what kind of led me on this irrational path of starting a company.
Yeah. So tell us more about the founding of OneSixOne. I understand you, in your time in Gainesville, you had a few startups of your own prior to obviously launching your own fund. I think that's such a valuable experience, especially for you now as a VC. I think we've all seen the memes of, the VC investors who have no actual operating experience trying to tell founders how to run their business. So I think for you, actually having that is super valuable. So can you just tell us a little bit more about that entrepreneurial journey prior to launching the fund?
Yeah. So prior to launching the fund, launched my first like actual company at 19. So doing web design, web development. I did not know how to code. Believe me, I tried. Like, I learned a little bit of HTML, made like a cat app. So, I just realized that I was never going to be the best coder. And somebody once told me, like, hey, just find out what you're good at and have people surround your weaknesses, double down on your strengths. So I wanted to be a great communicator, wanted to understand strategy, liked operations, the systems. So started to do web design and web development, outsourced all of it to India. I just focused on the sales side, closing deals, kind of running contracts. And then one day somebody came to me with a contract to do an app. And when I really started to think about it, I was like, yeah, I could make like, 10 grand building an app for them. But the real person who has the ability to get rich is the person who has the app. So it made me really think to myself, like, okay, I'm going to be stuck building websites for the rest of my life, trying to make 500, 10 grand here. And the people who make these really big apps, they become multi-billionaires, hundreds of millions of dollars.
Right.
So that's what I wanted to figure out. Okay, what is a problem around me that I can solve? And I think all great entrepreneurs are there to solve a problem. They're not really there to build something cool. They see a problem, they build a solution. That's why I love the capitalistic system, because it's all about, voting with your dollars and people solving problems.
Right.
So I started a parking app, which, as you know, in Gainesville, parking is rough. Yeah, parking is rough to say the least. And not only during game days, but throughout the whole entire year. So,
totally.
Yeah, so I wanted to be able to alleviate on-street congestion with private driveways. And it was basically like an Airbnb for your driveway. Raised a little bit of money, from friends and family, started to go to operations. But one of the biggest things that I realized was all of my friends wanted to launch companies, and they were all forced to leave not only Gainesville, but the state of Florida, because there was no early stage capital in 2016, 2017, right? There's nobody writing checks to startups. So first of all, they're all leaving. And I really wanted to fix that more than anything. So it was like, I almost kind of shifted problems. I was just like, I really love the whole parking thing. Parking business is a really hard business to get into. The unit economics just don't really make sense unless you scale. But that kind of led us to the next thing. Like, how do we find early stage capital for founders? And then we met our biggest mentor, Martin Schaffel, who's a professor at UF. And as a Lifetime Achievement Award for University of Florida, sold this company $500 million, 100% equity owner. Like, this guy is the real deal. Like, he's amazing. And he was like, hey, if you guys want to solve this problem, like, let's all get together. Let's start, hosting people. So we started to bring in founders, funders, professors, other entrepreneurs that were in the ecosystem, and just started hosting once a month socials. This happened for like a year or two while I was running the app. And then, me and Pablo just kind of looked at each other and were like, okay, like, this is really cool and it's cute, but like, what's the next step, right? Like, we're just hosting events. There's like no end in mind. So that's when we started adding workshops and round tables and more like curated programming aside from the community piece, because the community and capital is really big. But if you don't know what to do with the community or the capital, like, there's really nowhere to go. So we looked at Y Combinator. We looked at what they're doing. And we're like, we would love to emulate something like that on the Southeast. So that was kind of like our North Star, like building something really cool like that. So we wanted to launch an accelerator and then maybe one day a fund. So, dude, 2020 hit and we're doing like podcasts and we're doing socials while running our businesses. This is just like a fun project on the side. And, we were like, you know what? Obviously everybody had to shut down. Nobody could get together in person anymore. So we launched a virtual accelerator off the UFL Zoom, actually. A UFL Zoom.
There we go.
Yeah.
Hey, UF was ahead of the curve, honestly, with Zoom and all of that. So,
they were for sure. So we used the UFL Zoom link and literally, helped 40 companies, 40 different founders over a course of a year and a half, because we did 4 cohorts, 10 companies per cohort. We helped them raise over 13 million. They generated 15 million. One of the companies got acquired. And
fantastic.
So we come back to Marty and we're having a conversation with him. We're like, hey, Marty, like, look at all the great work we're doing, helped all these companies, get funded, and, it's been a great experience. And he's just like, you guys didn't make any money off this. And he always told us, don't focus on the money, focus on the impact. And he was like, I think you took my advice a little too literal because now there's been $13 million exchanged and you guys didn't even make $500. So that's when we really started to rethink, like, okay, we, literally there was an acquisition that happened. Like, there's going to be more, and we can't just keep letting these companies come through. And also we could have more impact if, who knows the company's better than the people that are spending 10 weeks with them. Like, these investors show up to demo day and write a check, but like, we're spending intimate time. We're up till 3 a.m. on phones with them, like understanding their business, their personal lives. So we have like a better sense of due diligence for the companies. And we're like, hey, like, we want to be able to raise capital and invest directly into these startups. So that's when it started. We were just like, hey, let's figure it out. We interviewed probably 65 different GPs. So these are partners at all different funds. I'm talking about East Coast, Northeast, Southeast, Midwest, and West Coast. All four have completely different ways that they invest, right? Like your New York guys are more like very quantitative, right? They're like, hey, I want to look at the numbers. The Southeast is more like middle market PE, right? They're like, okay, well, like, how is this de-risked? What's the value of the company? What can I salvage? Midwest was kind of just like trying to get in early in some stuff that they might have strengths for. So like advanced manufacturing, healthcare. West Coast was like, how big can this get? Right? These people just want to write checks into amazing people and want to see how big it can get. They don't care about the financials. They don't care about, what your previous background was. They just, can you build stuff? Can you ship it? How big can this possibly become? And, we kind of fell in love with more of that style, I think, than anything else.
Right.
But it helped us kind of mold like what we liked and what we didn't like. Me and Pablo both went through a bunch of different programs. I did the Venture Capital University program at UC Berkeley. We also did two other emerging manager programs, and then came back to all of our mentors, investors that came to our demo day and was like, hey, can we get some cash? And a majority of them were like, you're crazy. They're like, yeah, you guys are 26, 27 years old. There's no way that you guys are going to raise a fund. A lot of people, which would actually always piss me off, they always would say, why don't you just start a company and sell it first? And I'm like, we are starting a company. A fund is a startup once you're first getting started. This was an insane mission, just like going and starting this fund. Like, it was irrational. It was maniacal. It was crazy. So yeah, just started raising capital and doing some deals.
One of the kind of the recurring themes in that story is just kind of taking that leap before you're actually ready. And I think that's something that's so important, especially at an early stage in your life. I think it's always easy to say, oh, I'll wait until I hit a certain dollar in my bank account. Oh, I'll wait until I get promoted. A lot of times you just got to take that leap because it's never going to be the perfect time. And I mean, for your situation, just COVID happened and that's a terrible situation, but all of a sudden now it's way more normal for a program to be fully online. Also, great competitive advantage to be at UF where you already had the resources in place. So I think it's just a really interesting kind of story along those lines, just if you look at it from the Malcolm Gladwell outliers perspective, being in the right place, the right time, taking that initiative. But I really liked what you said earlier about, you realized that technology and kind of the coding side of things weren't your strengths, and it was more important for you to follow your strengths. That's something I say all the time, whether it's to students applying for internships, startups, whatever it may be, always just leverage your competitive advantages and think through what you actually have the potential to be the best in the world at. Because, that's what is going to take you to the top. So I'm curious from your perspective, kind of what do you think your competitive advantage is? What do you think you have the potential to be the best in the world at doing?
Yeah, I think that I think of information really differently than most people. And sometimes I'm just like, why don't I understand things the way that other people do? But it's for the best. Usually people look at things like in a sequential manner, like this is the beginning, this is the end. And most of the times I think of everything the exact opposite way. Like, where's the end and how does it correlate with the beginning? So it's like every time that I think of things, I'm thinking about strategy and I'm thinking about leverage. And this is what I used to say every time we brought people into the organization. I always used to say, like, I want to leverage for leverage. Like, I want to use absolutely nothing to leverage for everything. It's like kind of the story about the guy who started with the red paperclip and ended up with a Porsche, right? It's like, how can I take a paperclip and sell it for a Porsche? And it's all about just value creation, but value stacking. Like, how can I leverage a name or likeness for maybe a brand to come and sponsor or partner with me? And then how can I leverage the name and brand that sponsored us for like a major speaker, and then use that speaker as a maybe potential investor? So that's also what we're doing with the event side of things. I would say one of our biggest strategies and differentiators is going back to those early days of having the events in our DNA. And the events bring a few different things for us. So the events that we host, I was talking about Gainesville Tech Week, Gainesville Innovation Summit. We're doing something mid-March in New York City at Neuhaus. I'd love to have you there. Like, would love to see you there. I'm sure to give you a ticket. But the events bring us great marketing and branding. More importantly, they bring us potential LPs, so investors into the fund.
Right.
Every event, we usually let like 2 or 3 founders pitch. So it's a great pipeline for deal flow. And then we also bring like major enterprise leaders to come and speak at the events. And those could be either investors, advisors, or potential clients for a portfolio.
Right.
So like, we're also like slipping in our portcos. We're also like getting them as advisors. So it just so it kind of hits all of these different angles, and it could generate cash for us too. We could also profit off these events. So that's what I'm talking about, like leverage. Like what everything is input output in my mind. Like, how can I do one thing, but it knocks out 5 different things at one time? Right. Instead of just having this kind of, because I've talked to a lot of other fund managers, and they're like, oh yeah, I want to maybe go and, a lot of people like run ads. Like, what are you going to run ads and get great deal flow? Like, that doesn't make sense.
Yeah.
Like the best founders are like, what value are you really bringing me? Probably if you run some ads and get some people to put in your deal flow, it's going to be horrible.
Yeah.
No.
Yeah. No, very, very good points. You mentioned earlier on kind of your relationship with Marty, and obviously at UF, he's a huge name. He's done amazing things. He's been a huge part of your life and kind of your journey, not just with OneSixOne, but I'm sure your own personal development and kind of the way you've seen the world. I'm curious, just from your perspective, I mean, how do you find those types of great mentors? What position, what can someone do to put themselves in a position for those relationships to form? Because obviously it can be extremely transformative, but you got to be in the right place. So, coming from your background, coming from your experiences, what allowed you to kind of make that happen? And what do you suggest to other people who want a similar experience?
Yeah, there's 2 really big things. One of them is the law of association, right? Which is associating yourself with these people. The second thing is the law of proximity. So it's like, yeah, you want to associate with these people, but until you can get close to these people, like how is it going to happen? So you need to put yourself in these environments where these people are. Find out, okay, you want to be the best golfer? Go in the proximity of where all the best golfers are. You want to be the best basketball player? Figure out where they're at and then go towards that. And then you could build through the law of association. But most people are trying to build through the law of association in their current proximity. And their current proximity probably has nobody in their network that they really want to build with. So it's just like kind of thinking about things. And then to put things even more simply, to be completely honest, like just ask. It's crazy the amount of people that don't even just ask, and like, I'm like, hey, I want to formalize you being my mentor, like verbally say it to them. And they're like, okay, who at the top doesn't want to be like, oh, wow, this kid looks up to me and he reminds me of himself. And I'll give him a, few minutes of my time. It's super flattering for everybody, and everybody wants to be looked up to. So when you're like, hey, I admire you. Hey, I look up to you. Hey, I want to learn from you. I'm hungry. I'll listen. I'll implement. And I want to formalize a mentorship with you. People 9 times out of 10 will be like, yeah, for sure. I'll take you under my wing.
Right. Yeah. Yeah. That's interesting. And I mean, so many of the great people I've met in my life, I mean, including you, have come just from the other side of sending a message on LinkedIn. You really never know. And of course, there's the value of being in person as well. But I think, honestly, it's one of those things that's overlooked by people, just the power of asking. Kind of going back to the funds, I know you've had 4 cohorts now of companies. Through all of that, what's been your favorite company, your favorite experience with that accelerator? And, I think obviously you've built some strong relationships, but just would love to hear kind of a cool story or anecdote from the accelerator.
Sure. So I'll give 2. I also have an anecdote, but I think as far as like the 2 most impactful parts, the first was our first cohort. We had a UF founder, Elazar, and his co-founder, Blake Richardson. And they went through our first cohort, and they were actually the first investment out of our fund. So like full circle, all the hard work that we put in. And we like to say that the accelerator was like our tuition. We did it for free.
Right.
We missed out on a bunch of deals that right now are like, one of the companies right now is probably doing about $300 million a year in revenue. And we didn't have any cash to put into it. So it's like, believe me, that tuition was very expensive. Way more expensive than you have. So yeah, I think that was an amazing, impactful, just like full circle. Something else that I really loved that just like really, because I'm all about impact. Something else that was awesome was, aside from the virtual accelerator that we did with all the companies across the country, every fall we do an accelerator on campus at UF in partnership with the ELC.
Yeah.
And the first year that we did it, this year was the second year we did it, but the first year we gave these 2 founders $10,000, because the whole entire competition is each week is a different topic. Whoever has the most traction at the end of the 10 weeks, the top 3 get to pitch for cash. And it's a grant. It's non-dilutive funding. So we gave them $10,000, And like 6 months later, they ended up closing a $250,000 contract with the Space Force and building an aerospace company. So it's just like, seeing the amount of impact you could have with even $10,000, because as you know, like these are the sharpest kids in the country.
Right.
So it's just like super awesome being able to see the amount of lives that you could change. And honestly, that's why I got into entrepreneurship, because I saw all the broken infrastructure and all the problems that happened in my neighborhood and where I'm from. And I was realizing like you could change all of this through entrepreneurship. Like just being an entrepreneur and fixing problems.
Totally. And you touched on it there, the in-person aspect in Gainesville and your relationship with this school. I mean, going to UF, I understand it's kind of rural. Yeah, Gainesville's a great spot.
Sure,
but it's
not
kind
like
of
go to UM or something.
I was going to say, so what has been your kind of the reasoning for sticking? I understand you've been in New York, you've been in Seattle, you've been all over, but home base seems to be relatively Florida.
For sure.
What is so exciting for you about Florida, especially when you mentioned in 2016, it was very hard to raise capital. I know things are changing, and a lot of that is with respect to you and the work that you've done. But what is your commitment to Florida?
Well, Florida's amazing, and look at if you want to see if we were right or wrong, look at everything that's happening now. Right now, Citadel's moving here. Kathy Wood is down here. All these really big players are now moving their cash to Florida. Trillions of dollars poured into the economy, and we just realized like it's an open space. And it's crazy because like we've been traveling all across the country, and people across the country talk so much trash about Florida. They're like, it's crazy out there. They're racist and they're this. Dude, after we travel across the country, we're like every single the homelessness rates are insane, right? The amount of just like political, it's insane. Literally.
Sure.
There's no freedom. They're just destroyed, a lot of these cities, right? Like, the amount of crime. Yeah. So I mean, we just think it's a great place to do business overall. But aside from that, I look at it the same way that, we look at investing. You want to be the first person to see value before everybody else does. And we realized with Florida, like we could be the pioneers and we could be the people that are changing the ecosystem, changing the economy. And, like, I'm not going to come to New York and be like, oh, I helped build New York. Like New York has been built forever, and we can have an impact and be a small cog in the bigger machine, but you're never going to be like the father, the founding father of something great. It's already there.
Yeah.
And that's kind of personally from my own like selfish standpoint. I was like, hey, I want to be the person to help build something that hasn't been built yet.
Very cool. Yeah, I think all the data would indicate that was the right decision, and will continue to be that way. Kind of going back to OneSixOne, can you just tell us more about the investment mandate, the type of companies that you look to invest in, and kind of how you got to that conclusion that that's where you wanted to focus?
Yeah, for sure. So obviously we talked to a lot of different other GPs. I would say that there was some parts in it where I wish at the earlier days that we didn't let them box us into what we could or couldn't be. I mean, if on the back of my phone, it literally says, trust yourself, stop second guessing yourself, because some of the big deals we missed out on was, not, thinking that we had to be so strict. So we saw the macroeconomics coming, right? That, all these businesses, Web3's done, it was a trend. Because there was a lot when we were forming this fund that everybody's dumping their money into Web3. Now they're back to Web2. But yeah, we saw all these trends happening. We saw just people overvaluing these companies. There's something called a vintage year. So every fund is like a bottle of wine, essentially, right? And the bottle of wine comes down to the macroeconomics, right? Was it a dry climate which produces bad grapes, which means that's a bad vintage year for a bottle of wine. And we noticed like, hey, we're going into a tough year, and we want to invest in businesses that aren't reliant on the consumer at this point in time, because the consumer spend is kind of slowing. Consumer debt is insanely through the roof. Enterprises still have cash. And if you can run with a lean team, you can close big deals with enterprises. You could close a $250,000 deal with 2 people. So, not only did we realize that, but we realized as enterprise spending did start slowing down, there was another opportunity to sell to the government, right? So this is universities, this is municipalities, this is the Air Force, a lot of different avenues. And that's how we came upon the GovTech sector as well, because our first investment, Easler, started selling to fire departments. They started selling to Air Force bases, and it was just like night and day. They just started pumping out contracts. They became profitable immediately. They had a super lean team. And we're like, this is something that, back to earlier, you want to see value in something before everybody else does. So founders are having a hard time getting cash because nobody wants to invest in GovTech, which by nature also just like shows that the deals are undervalued, because the price is all based on the competition of dollars into the market. So if everybody's trying to pump money into the same deal, the founder kind of, it's a seller's market, right? They're like, hey, I have 20 term sheets at this price. Why would I take yours? So, yeah, there was just a lot of reasons that kind of like helped us focus on enterprise SaaS and GovTech for folks, be able to open that up, and we want to be able to do more stuff. Like, I think, we want to do a few deals. We want to do some, a bunch of different stuff. I don't think we'll do biotech or anything crazy like that. It's just not in the wheelhouse. Yeah. I'm also not interested in it, but it's
but
yeah, that's where we're at.
Yeah, no, that's interesting. And obviously government is something that is ripe for a lot of innovation. I think we all are well aware of that. Something that you mentioned there, just that caught my attention, is with respect to potentially saying no to some deals. When a company still comes to you and it's a great company, what do you do with it? Are you the type of person who then shares it up the ladder to someone else, to another one of your investor friends? How do you approach those situations where the founder's great, there's product market fit, it's just not part of your mandate? How do you kind of approach that situation?
Absolutely, for sure. Oh, and really quick, I wanted to mention back to the first thing though about the GovTech is that like I'm true and through, like I love America. So like as far as like national security and being able to provide innovation within the government, like that's huge for me. My family came here from Puerto Rico with 10 cents. Like we're always so happy and proud to be American. Like, so that's like something that we really love and try and focus on. Now back to your question. Absolutely, without a doubt. What you really want to have from like being a valuable fund is you want to have those later upstream investors who can invest, Series A, Series B, Series C, support your portfolio companies. Sometimes these investors will even invest in your fund because they want early exposure. There's just so many reasons on why you should send them deals, like even if they're not the right fit. Building that network, building that flywheel, like just bringing people value. I always believe like if you just help everybody around you, you're going to be successful for sure. So yeah, we always try and share deals, even if it's not in our wheelhouse, and even if we get nothing in financially from it, like in the short term.
Right. I love that. And I think just the venture ecosystem in general is something that there's so many opportunities to provide that value where you're not necessarily looking for anything in return. It's just, hey, goodwill building. And I think that scouting deals and all of that is just a great way to go, especially when you might see something because of your relationship with students at UF that creates a lot more opportunity and deal flow than someone out in the valley might not necessarily.
Absolutely, without a doubt. And you know what? That's what I try and tell students all the time is I'm like, hey, if you want to be a part, because it's hard to get like a VC internship or a job. It's a really small group of people who get into this industry, and they're all like really tightly connected. If you can bring them value and show, especially through deal flow, that's kind of the name of the game. Like, hey, I want to be an analyst, and okay, I went through all these economics classes. I know finance. I'm a genius, whatever. Or the kid was like, hey, maybe I don't know how to financial modeling as well, but I have deals you're not seeing and stuff you want to invest in. They're going to hire the second kid. I have my own networks. I have my own connections. I have my own pipeline. And just by showing people this and sourcing deals, I think also brings a lot of credibility and value to whoever you're around. So I always try and tell people, like, if you want to break into VC, like, just start sourcing deals. And obviously that's not,
I think that's
it, but yeah.
Sure. No, I mean, that from my experience, I mean, that's been an opportunity for me just with this YouTube channel. A lot of times I do get, certain consumer startups that reach out to me for brand sponsorships and things like that. And that was kind of the side of the market that I would see that a, consumer investment firm might not see. So I have experience kind of as a venture scout in the past, just because of that kind of specific opportunity for me there. For a student who would be interested in getting involved with scouting deals and kind of being able to provide that value, how do you recommend them to find those opportunities? I mean, obviously that's the golden question. But is it being active on Twitter? Like, is it just being in the know on campus? Like, for someone who isn't already involved in the startup space, like, what's the best thing that someone can do to kind of see a little bit more action in that?
Yeah, for sure. And I won't give one granular answer. I'll just kind of give a more broad general answer. It's just like find distribution channels, right? Which Twitter would be a distribution channel. Is like figure out, and maybe let's say you don't even have internet, right? Like there's a million ways and people make excuses. Like you could find deal flow. Just find these untapped distribution channels, whether it's your local accelerator, whether it's your local professor who's mentoring students, reaching out to entrepreneurship clubs, reaching out to all these different things. So just find where the pipelines are kind of starting to bubble up and be the first one to touch that. And then if there's absolutely none, build your own pipeline, right? Like start just hosting demo days, right? Like I even said that to somebody. They're like, hey man, I want to break into venture. I'm like, you don't have to do the whole accelerator like we did. Why don't you just start to post online saying, hey, I'm hosting a demo day, apply with a link, get, 100 applications, sift through them, pick the top 5, 10, and then told a bunch of investors, hey, I have 5 startups you never looked at. It'll take 30 minutes of your time, 5-minute pitches. Like you want to show up and check them out? People will do. And then people start to see you as a deal flow pipeline and they'll start sending you more deals. So it's like creating that flywheel through that.
Yeah, no, I think that's a great set of advice there. Kind of going into the personal side of Justis here. In prior podcasts, you've mentioned you grew up and you still kind of face an adversity or a scarcity mindset. What have you done to overcome that? And could you just kind of explain that to the audience? That's something I honestly have struggled with too in my personal life, especially coming here to New York City and all of that. But would love to kind of just hear your perspective on that and how you've been able to overcome it.
Yeah. I think the biggest thing, like the biggest fundamental change is having a belief in yourself and just knowing like you're going to figure it out one way or another. And then second of all, just looking at everything around you. Like to believe that something is scarce would be like an absolute fallacy, because if you look around you, everything is so abundant. If you're like, there's no money, look at the billions of dollars that are being built across the street. Every time I look at a building, like that's like 20 million. And like you look at the concrete, look at all the money that's being exchanged and look at all of the things that are around you. How can you get in there and just like bring some value and get some? So I think like just knowing at the end of the day, like I'm going to put deals together, I'm going to close stuff, I'm going to bring value, just makes me also realize like I don't need to worry about, even if today I don't have what I need or what I want, I know I'm going to figure it out at some point. So I can't let 10 cents keep me from making $20, or 10,000, because that's what people do all the time. Like I think most people come on this defensive position, and this is what helped me get over the scarcity mentality is I'm living my life. Okay, let me, eat extra ramen noodles and let me, but statistics and studies show and just reality shows you're never going to be to where you want to be by saving 10 cents here and 10 cents there.
Right.
Like obviously don't blow it all for sure, but you're not going to get rich by eating ramen noodles versus eating chicken thighs. It's not going to make you rich.
Yeah.
What you need to start doing is taking maybe whatever money that you have and going buying stock, going and spending your time buying courses, right? Trying to buy books and push up on your reading. Everything you do should be on the offense. And I think too many people live their life trying to be on the defense and like trying to figure out how they could like, oh, I need to stay away from risk. I think you need to be riskier. I think you need to go harder. I think you need to work more and just like go straight on the offense. And that's what will change everything.
Yeah. And especially early on in your life. I mean, it's one of those situations where realistically you lose it all. There's still plenty of time to come back. But also you might not lose it all and the bet can pay off. A lot of what you just alluded to is just that confidence that you have. You're a very confident person. You obviously are in some amazing circles. You had a great event. where does that confidence stem from?
Oh, to be completely honest, I usually don't tell people this, but it comes from anger, actually. So, like, I was so angry as a child just because of the circumstances and just abuse throughout my life. I was like, you know what? And even now, like, literally, I'm going to win or I'm going to die trying. And I was just like, you know what? The harder I went and the more I pushed, it just kept building confidence because I kept just going towards it and it kept getting closer and closer.
Yeah.
So I'm just like, either way, I'm going to make it happen regardless. And I think sometimes it can become a poison, so don't let it dictate your life. But sometimes you have to get angry. Like, don't just sit there and be passive or be sad. Like, transmute that into something. Like, even if it's, maybe not happiness, hey, I'm angry and I'm willing to fight for it. And I'm going to stand up and I'm going to stand up for myself and I'm going to go after what I want. And I think that just like really changed a lot for me. Another thing is before I believed in myself, like I told myself that I believed in myself, which was like a complete lie. I'm like, hey, I got this. Then after a while, like it started to actually, like, everything around me changed. So it was just like, man, I actually do have this.
No, yeah, I think that's super interesting. I mean, obviously the concept of fake it till you make it. And I forget where it is that I read it, but it's like when you tell yourself that you're great and you're confident, your body and your mind actually can't tell the difference between you lying about it and it being the truth. So if you pretend to be confident, you're actually being confident.
Yes.
So I think that's just a great mindset, especially as someone who goes to a lot of networking events. A lot of times it can be pretty daunting to go up and introduce yourself and, be around other really accomplished individuals. And so I think that's just a great thing to always remember. Yeah. Kind of, again, diving back into just the venture side of things, you travel all around. What has been your favorite event or your favorite experience? And like, I'm sure you've had a pinch me moment when you're like, I'm really living this. Would just love to kind of hear an example of what that might be.
Every day, literally. I had this yesterday. Like, I went for a midnight swim, hopped in the hot tub, like hit the gym. I'm just like, dude, I'm here. Like, this is crazy. Yep. I always wanted to make it and go live in Miami and go travel and go do business. Like, that's every moment of my life right now. And it's happened a million times throughout the process. But that's also why I believe that you continue to receive blessings, is that, like, you have to be grateful for what you have for the world to give you more of it. Because it's like a kid, right? Like, if you're not grateful for me getting you a gold watch, like a silver watch is also not going to impress you. So if you're grateful for the silver watch, they'll probably give you the gold watch. It's just like, be grateful for every little bit of your life. Live in a state of like gratitude, because that's also a state of receiving. And just like keep being grateful for everything. But yeah, I mean, I wouldn't say it's any one singular thing. Yeah, I mean, I'm just super grateful for everything.
Yeah. Well, for you, I know you've been to Silicon Valley and the San Francisco area. You've spent plenty of time in New York and Miami. Where do you see, obviously you have the very strong growth potential in Florida and Miami specifically, but where do you see the growth of venture being in the future? You think it's less of that bi-coastal, it's either San Francisco or New York or bust, or, do you think it is possible to have a unicorn startup out in Oklahoma City? All of those things, just being based in the Southeast, it's one of those regions that traditionally isn't known for kind of their innovation and their startups necessarily, but would just love to kind of hear your perspective on that, where it might not be, what's in the movies, but there's still a lot of opportunity. So I'd just love to kind of hear your thoughts on the future of the venture.
That is such a great question, literally, for sure, because we were just discussing this, and this is kind of how we want our firm to operate too, is that, yes, absolutely. I don't believe that this is going to be in these concentrated old traditional hubs like a Silicon Valley, like a New York. I think it's going to be more towards where there's great engineering talent and there's a low cost of living. So it's like, hey, I have as much talent as I can build around and create the flywheel. That's why we have a major focus on Gainesville. I mean, you can live off 40, 50K in Gainesville comfortably, which is crazy. Oh, yeah. And New York, you're screwed, as you know, for sure. I mean, you're not going to die, but you're not able to go out to dinner 2 or 3 times a week.
Sure. Yeah.
But yeah, so it's just like, I think where there's talent density at a low cost of living, you can access anything else you need from there. And I think that that's where you'll start to see a lot of other of these hubs start emerging as things become more distributed. Because after a while, people are getting sick of having to spend insane amounts of money just to survive. High tax rates, people are making less and less each day. The price of every good around you is inflating. So it's just all three of these things are eating away at what people are traditionally made. So people still want to be able to travel. It's like, hey, I can live in Gainesville, but I could go take a trip whenever I want, instead of having to live in a San Francisco and not being able to take anything ever. You can't go to Europe once a year. So I think that that's kind of where things are going to start to go towards. It's just like high density of talent, low cost of living, and then obviously access to potential clients and customers is like a plus.
Of course.
So like a Cleveland, Ohio, like, dude, you have the Cleveland Clinic, you have University Hospital, great university hospital system. Like, that's a great place to build a health tech company, in my opinion.
Right.
They have, a few universities, stuff like that. So, yeah.
Yeah, you always see a lot of activity around universities, obviously, and kind of certain hubs. I mean, Cleveland is known for its medical side, and you mentioned Pittsburgh before with the engineering. So it's always interesting to see kind of just how that ends up being created. But shifting gears again, so much of OneSixOne is about developing young talent. It's obviously a great accelerator for talent on campus at UF. And so much of what you do is just kind of helping that next generation, or I guess I should say our generation. But, what does that drive come from? I mean, especially at such an early age to still be so, I should say, mission and impact driven. What does that come from? Why is it not just, I want to do everything just to make $1? Why do you really seem to care a lot about kind of helping others?
Absolutely. So, somebody told me this and I never forgot it. And this dude's dad was like multi-billionaire. He was like, the way to the top is not with your palm to the sky. The way to the top is with your palm to the bottom, which means you're not asking, you're giving. So I think giving is like the biggest way to really to go to the top, and that's through impact. But aside from that, when we first started to tell people we were focused on younger founders and kind of these like tech hubs that were more around younger people, we wanted to invest, not in like a 80-year-old man launching a startup, is they told us that we were crazy. They were like, that's insane. You guys are investing in young talent. Usually young talent doesn't have a big track record. They don't have a big network.
Sure.
And as things are starting to continue to progress, we've been being proved right again. I truly do believe, not just impact aside, that this is the best investment, because as things like AI come out and tech is moving at such an exponential rate, I don't believe that the older generation can keep up with what's really going on. And they don't know how to utilize the tools. They don't understand the trends. They don't understand consumer behavior, right? Like Gen Z soon is going to replace the boomers as far as, or even the millennials are going to replace this as like the next purchasing power for the United States. So like, who's going to understand those people? How are you going to sell to somebody you don't understand? So like, we truly believe that it is not only impactful and it's the right thing to do, but also we think that like bottom line, we're going to have the best returns because of what we're doing.
I know we kind of mentioned the future of venture, but we're still, I guess we're technically into the second month of the year now, but what is your biggest prediction just for 2024? We obviously just saw the Apple Vision Pro come out. That's been the talk of the town, but what are you excited about for 2024? Where do you think, the 1 year is creator economy, then of course ChatGPT. What do you think is in store for 2024 in terms of the trend?
Yeah. So we actually just made an investment into a company called Rain AI, and it's Neuromorphic Computing, and it's actually the CTO went to UF. We know him since like 2015.
Great.
And funny enough, the co-founder of NVIDIA, who created the GPU, went to UF. Now this is called the MPU. So the biggest problem with AI, right, is they're trying to figure out the energy problem. It consumes so much energy. They said NVIDIA continues to grow. If everybody wants to build on top of these GPUs, it'd be taking up like, dude, something crazy. I forgot the stat. It was like 1/3 of the globe's energy. If they really want to do what they want to achieve, OpenAI alone can consume nations worth of energy. So, we need to find out what is the next thing. And that's what we're trying to invest in. Is like what is the next processor? What is the next method of computing? And I think that's where things are going towards next, is that it's everything in AI is limited based on, binary ones and zeros in the old computing method. And I think that neuromorphic computing could be the solution and the holy grail to everything else. So it's literally like building a small brain and a chip that does computations on device. So yeah, we placed our biggest bet ever yet so far. So hopefully I'm right.
Yeah. No, very cool. And that's probably a little bit more contrarian. I just because I haven't seen that on Twitter yet. I haven't seen that on LinkedIn. So it's always interesting to hear what's down the pipeline. Obviously with something that's quite technical like that, you're doing so much learning constantly. That's a really important part of venture capital and just being a good VC. What approaches do you have to kind of consume a lot of information and be up to speed on things, to be able to talk about neurocomputing and all of that? Because it's pretty impressive. So how do you do that?
Yeah, I try to look at these kind of like fringe people who are like, maybe you would think they're like crazy. So like Sir Isaac Newton, they thought that he was a maniac, right? Like the guy who basically is the godfather of physics. So like I like to see the people who are like these weird fringe contrarian thinkers and like what they're coming up with, what their theories are, then also test them against like conventional knowledge. What else is coming out? And this guy had this weird fringe use case and what he believes is true. It seems like everybody's actually saying the same thing, just in a different way. So like the verbiage might be the same, it's very different, but they're kind of alluding to the same thing. You could find these things through research papers. You could find them through these weird YouTube accounts that have 150 views. Like there are people out there that are pumping out like real educational knowledge, and you just have to sift through it and try and put all the different pieces of the puzzle together that seem like there's absolutely no correlation, and then just like come upon your own conclusion. You might be right, you might be wrong, but at least you have to take a chance. So yeah, it's pretty cool. But I was just trying to realize that like everybody that I meet is smarter than me, including yourself. So I just try and listen to other people and then form my own conclusion.
Yeah. No, well, I think that's the way to go. And the mindset that everybody you speak to, you can learn from is really important, especially when you're meeting as many people as you are. Finishing off the podcast, I know you're a big reader, as am I, as you can probably tell behind me. I'm just curious what your 3 favorite books are, maybe the books that have had the most impact on you, and what you would recommend kind of to the audience to read.
Yeah, I have one of them actually around here somewhere. I think How to Win Friends and Influence People is something that everyone should read. Think and Grow Rich was the one that changed my life, like set me on the path to like really like changing everything. I mean, dude, I could name like a million of them that were so great. Like if you want to get into business, if you want to get into VC, The Business of Venture Capital is a fantastic book, like beginner's book that could break down everything.
Right.
The Richest Man in Babylon was a great book if you're trying to learn finance. As a Man Thinketh was just a great like soul book. Same with The Alchemist.
Yeah.
Compound Effect as far as habits, Atomic Habits, also back to habits.
Yeah.
And then there's a bunch of great Harvard Business Review books as far as if you want to learn like soft skills about like managerial stuff. But I can go on forever about like different topics. I hate to just pick 3. It's like picking your favorite.
No, I know. That was a mean question for someone who clearly enjoys reading as much as we do. But again, Justis, appreciate the time today. Want to give you kind of the opportunity. What advice would you have to someone who's maybe 16 years old and they're considering kind of what they want to study in school, what they want to do with their life, what they want to do with their career? What is your advice to somebody who's just trying to figure it out?
Yeah, find out what you would be happy doing from now until the day you die. Find out and align that with what you're good at, what you like to do, and what you think you could actually like push the needle on. So like figure out like in that, I forgot what they call it. It's like the Japanese kind of where you have to be good at it.
Ikigai, I think. Yeah.
You have to be good at it. You have to like it. You have to be able to. So just like kind of figuring out that. And then aside from that, on top of it is just try everything. Like just, Richard Branson says it all the time, like, screw it, let's do it, So sometimes just walk through a door. You might not know where it goes. It might be unconventional, but if you're that young, you should be taking risks, taking opportunities, and just like, dude, if it doesn't work out, you're still so young. Your time frame is just completely different. So yeah, just try new stuff all the time.
I love it. As a final closing, where can people follow you? Where can people support you? Keep up to date on OneSixOne. Plug whatever you need to plug. It'll all be on the screen too, but give you the chance there.
Thank you. Yeah. Active on LinkedIn through just my personal name. Very active on Instagram to my personal name. Our website is OneSixOne.Ventures. And we also hop on Twitter, but not as active. So yeah, I'm active on social media under my personal name. We're active on all accounts to our OneSixOne Ventures name. And that, just hit us up. We're very responsive and always love to help out and get involved.
Well, perfect. Justis, really appreciate your time. I honestly just can't wait to see what's in store, not just for you, but for OneSixOne and for Florida. So yeah, thank you again for your time and looking forward to staying in touch.
Thank you so much for having me.